Welcome traders. So in this video, I'm actually going to be discussing the moving averages and how to actually effectively use moving averages on your chart and how I have visually used them in the past to actually identify key trades and certain setups. If I hop onto the daily on Euro USD, so I've removed all of the drawing tools. So all we have is candlesticks and moving averages. The first major aspect is the main setup. Now, these are the main moving averages that I've used for the past, say, 5 to 6 years. So the blue one is set at 9, and these are exponential moving averages. So 9, and the red one is set at 18. So those are the two main ones, and usually I just keep them very, very simple and very, very straightforward in terms of looking at the trend. Because most of the time when it comes to technical analysis, those moving averages are used as a final confluence in order to find and identify the actual trading setup. And obviously all of this is going to come with a lot of chart time experience and the way that you recognize the different ways that the market moves around them. And then it's actually how to implement them at a later date and how we can use the moving averages to make a profit essentially. But overall, if we just keep the main structure as is, if the blue is above the red, then usually it indicates uptrend, as we can see here. If the blue is below the red, then it indicates downtrend, as we can see here, downtrend with lower lows, lower highs, lower lows, lower highs, lower lows. And obviously it does at times get quite messy and it does close together, where we actually see crossover, maybe even a multiple set of crossovers before we actually get the final crossover, and then the market continues in a certain direction, whether that's up or down. But overall, the market, as you actually may already identify here on the daily, it does actually use it as support and resistance as well. For example, here, support, 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 until we actually finally closed and broke below the blue moving average. We squashed into the red moving average. We then, the next candle actually pushed way below. We closed way below the red, pulled back up into the moving averages to retest, and then we obviously finally got the moving average crossover, which did lag, as all of the indicators do. And then we did, in fact, continue down from that point. We pulled back up into moving averages, made a new lower high, and then we made a new lower low. So we can see here how the moving averages had actually formed this, and there would be certain sell trade setups upon the moving average crossover, which would have been able to be clearly identified. And yeah, we can see here how clean and simple this setup is, and it's just about recognizing when the moving average crossovers are going to occur, along with basically correlating it with the other analysts that you actually find. For example, trend direction, higher highs, higher lows, lower highs. Also in Fibonacci directions, for example, if a certain traders hit maybe a certain part of resistance, maybe a Fibonacci de-extension, then we need to correlate the moving averages as so. And as I said, moving averages can get squashed together, which can make it a little bit tricky for a trader to identify the market. But all we can do is step back to a higher time frame and look at what the moving averages are doing here. And again, as support and resistance, we can see here the moving averages on the weekly. We use this whole area here as support on the moving averages. We pull back in recently this year. You can see here, January 21, we've pulled back into the moving averages, but we did in fact break far below the red one. So here we had a sort of break below the blue one, but we picked back up and we traded within the moving averages. Here we've actually broken below and we've had a certain crossover. Moving averages have moved sideways a little bit and they've crossed back to the upside now, and we have pinned just off them. So the market is currently a little bit messy and is going sideways overall in this sort of section here, and there's not really much in the way that we can actually see in terms of the moving averages in terms of a trend or a certain trade direction that we can actually point our bias to, we'd have to actually look at the overall trend, and the overall trend is up because of the higher low here, which we did in fact not breach. Higher low, higher high, higher low. So this may in fact actually be a bit of manipulation before the moving averages cross back to the upside, and I'd be looking for continuation of the upside and use the moving averages as support once again to drive higher. So that's a key method and a key way of looking at the moving averages. Even on the monthly, you can use them as well here. And again, this downtrend here, we had a downtrend for probably a couple of years here, and we can see all of these spikes off the moving averages as we've formed down, and then a final closure break above the red. We've had a rally higher, much higher, and now we're using them as support. And on the monthly, we can see that it's a strong bullish moving average here. We've recently had on March, we had a big pullback, bearish candle into the blue moving average, but we've had a close back above, and the moving averages have widened to indicate that we are going to continue a little bit higher on this pair. So obviously do your own research on the Euro USD. Don't go blindly placing into a buy setup just because I've said this. Do your own research and look to see different ways that you can apply the moving averages in order to best fit your own strategy. But overall, that's how I would use them. So mainly it's crossover points, looking and identifying the crossover points and trading at the crossover points, and also using them as support and resistance. If you break below, then potentially you wait for the retest and pull back into the moving averages before you actually enter a trade. And they also work even down on the intraday timeframes, such as the 4 hour, 1 hour. We can see here on the 4 hour. So on the daily, we've just had we've had the moving average crossover on the Euro USD, and we are in fact looking higher. On the 4 hour, we are now awaiting the moving average crossover bullish to the upside. We're waiting for the blue to cross over the red, which may occur. And if we do get that shortly, then that potentially may indicate one other confluence as a reason as to why we should buy the Euro USD. So that's that for the pairs. On the hourly as well, we can see here hourly crossed over to the upside, just as an example here. But the hourly, it does get very choppy. Here actually is quite clean if we look at this sort of section here, but overall the hourly, usually the hourly will cross over before the higher time frames, obviously because of the more volatility, and because you're zoomed in on a certain currency pair. But overall, that's how I use them. So it's crossover points and using them as support and resistance. Another aspect and another way that you can actually use moving averages are if we actually, if I can just add in another one. So this one, I'm actually going to set at 200. Now, a lot of people use this, a lot of traders actually use this as much longer term viewpoints of actually where the market cycles are going to happen. And basically we use them again as is the current market price above it or below it, and use them as support and resistance. Now we're currently above it. We have recently used it as a bit of support here. On the weekly, might be a little bit more. So yeah, here weekly. Overall, the 200 MA on the higher time frames tends to work fairly well in terms of spotting the support and resistance levels. But as we go down through the different time frames, it also works as an overall another confluence as to where we could identify certain opportunities where the market has retested or looking to break in a certain direction. So it works in a similar way as the these more short-term moving averages that I use, but the 200 daily moving average is usually the other moving average that I would go to identify where the market is going to occur. Now, let's say, for example, we had a certain trend line. Let's just say, for example, it was around here, and the market was trading around here. then I could put on the 200 daily moving average and look that is another confluence as why the market should come to this level here and create a bounce. So it's just identifying where a lot of the structures of your technical analysis lines up, adding them all together, and then trying to find the clues of where the market is going to make these bounces, is going to make these higher lows, higher highs, etc. And then trade it around that and use your own market judgment in order to identify when a trading setup occurs and why you should actually place your trades in and along this analysis. But that's it for this moving average video. We're going to obviously have more of the videos to come on the blog, so stay tuned for that, and happy trading, guys.